So let's talk about how do the risk and return profiles, and we'll start off with you, Nick. How do the risk and return profiles of alternative capital residential investments compare to traditional buy-to-let investments in the current real estate market? And maybe, I think, Nick, just tell, maybe share with everybody what alternative capital residential investments are, because some people have a misnomer sometimes. So if you can maybe kick that off.
Yeah, well, I think firstly, Anil, it's a good question, because I think that risk and return really encapsulates, pretty much everything about investments. So, but just, I can only speak to the investments that we in particular offer. And the current capital investment that we've got offering is actually a capital guaranteed investment. So that alleviates capital risk to a large extent. And then you asked about returns. This one returns 14% per year over a period of 2 years, which is an effective 28% return on capital. So that's reasonably straightforward and reasonably easy to understand. I think alternative investments, to your question, Neil, is a very broad range, and it really encompasses almost all investments that don't form part of the traditional investment sector. And when I talk about traditional investment sector, I'm talking about traditionally with shares, bonds, equities, stocks, which have been around for a long time. So anything that's outside of that ambit seems to be labeled as alternative investments, which capital investments in property is therefore forms part of that.